Hi, welcome to Third Empire. In this episode, we will take you through the important news that took place last week. First off, the RBI has launched the pilot phase of the Digital Rupee rollout, and we will discuss what a central bank digital currency or a CBDC is and understand the significance of it. Now, a couple of economic data have also been released last week, which we covered in our DITMs. Now, we will analyze the core sector data and PMI number in further detail to understand how the Indian economy is performing amidst global headwinds. Lastly, we will discuss India's newfound interest in trade deals and why the GCC India trade agreement, which is under negotiation, is important. Let's begin. You're watching Informed Investor, the Third Empire, an initiative by Research and Ranking. After months of anticipation and buzz, central bank digital currency has finally come to India. Now, the RBI has launched the pilot phase of the Digital Rupee for wholesale segment, with the rollout for the retail segment expected to be launched this month itself. Now, a central bank digital currency is a digital form of currency notes issued by the RBI. Now, it is the same as the fiat currency, but the form is different. That is, the money does not have physical existence and merely exists digitally. As a result, the digital rupee has all these characteristics just like the physical rupee. And this digital rupee is convertible into regular currency at the rate of 1. Now, similar to using physical money, using CBDCs does not require a bank account. Currently, in order to transfer money using UPI, you must submit a request and have your bank process it. The bank then makes the decision to withdraw the balance and transfer it to the beneficiary account. But with digital currencies, banks are completely unnecessary. In fact, you don't even need to use a middleman to transfer money to another account. However, one significant difference between CBDCs and physical currency is that the former will have an infinite life because it cannot be destroyed or lost in any physical form. Do keep in mind that the digital rupee is not intended to replace hard currency, but rather to coexist as a separate form of payment. Now, the big question is it the same as cryptocurrency? Digital currency is issued by the country's central bank and is treated as legal money in digital form, whereas cryptocurrency is a decentralized asset and a type of private money. Hence, a CBDC is not a cryptocurrency or a digital coin. Like Bitcoin, it cannot be mined. Now, this also indicates that the digital rupee is unlikely to be affected by the environmental issues associated with Bitcoin. Now, there are multiple reasons on how CBDC can be helpful for you and I and the Indian economy. The most obvious one is transacting in e-rupee can take away the inconvenience of carrying around physical notes and coins. Now, apart from this, the RBI has also outlined some benefits for the country as a whole, such as financial inclusion and lowering the cost of cash transactions. Now, the larger aim of the digital rupee is also to bring the nation into the wider digital economy and move cash into digital form. Now, interbank transactions today also face settlement risk. That is the possibility that one or more parties will fail to deliver on the terms of a contract. Now, the newly launched Digital Rupee for wholesale segment is expected to mitigate this risk and also reduce the cost of transactions. Currently, trade transactions are processed by several banks, and each of them charge transaction fees, raising the input cost for traders. Now, using CBDC as an alternative payment system will augment speed, volume, and frequency of international transactions. As a result, this may also help Indian exporters by lowering their cost and increasing their competitiveness. Now, consider the Russia-Ukraine situation as an example of what may happen to a nation's entire financial system if India, China, or any other rising economy makes the decision that the West does not agree with. Now, CBDC can also offer an alternative to Western payment system. Now, India was also the world's largest recipient of remittances in 2021. But presently, the process is costly and time-consuming due to middlemen. Now, CBDC could also offer a direct method of cross-border payments. One of the largest advancements in the financial sector besides UPI has to be CBDC. Now, with the nationwide acceptance of UPI and QR-based payments, India already has a remarkable track record. Now, with CBDC, India is also anticipated to make significant advancements as the world moves quickly towards the adoption of digital currencies. Around 9 countries have already launched their CBDCs and 91 countries are working on it. Russia, Sweden, China, Jamaica, Canada, the US and the UK are at various stages of introducing the national digital currency. Now, the Bahamas, Nigeria and 7 countries of the Eastern Caribbean have already launched their central digital currency. Now, the history of money is definitely entering a new chapter. But the question of how quickly it will get adopted is still open, given that UPI and net banking have already carved out a sizable portion of the market for digital transactions. Also, more than 50% of Indians also lack basic financial literacy. The sizable Indian population still favors the traditional banking system. Now, in that instance, a low adoption rate may result from poor understanding of the significance of CBDCs. This might undermine the main goal of RBI's policy. Now, while the purpose of central bank digital currency is right, it is also crucial to find new and innovative ways that will make CBDC just as desirable as cash, if not more. Core sector is an index of the 8 most fundamental industrial sectors of the Indian economy, and it maps the volume of production in these industries. But it also indicates the functioning of the broader economy. Now, we will tell you why. Core sectors are considered to be the most important sectors of the economy because they are necessary for all other sectors to grow, and this includes electricity, fertilizers, cement, steel, raw materials, etc. Now, increasing demand for this means that demand is increasing among other sectors as well. So, there is an interlink between these sectors, hence growth in core sectors have ramifications on the overall GDP. Now, the core sector output of India increased to a 3-month high of 7.9% year over year in September, compared with an upwardly revised print of 4.1% year over year on August 2022. The higher growth appears to be primarily due to a lower base from the prior year. Now, if you look at the month-over-month data, the momentum has decreased. Nevertheless, on a year-over-year basis, core sectors have performed well amidst global challenges. Now, coming to the sector breakup, most sectors have seen double-digit growth on a year-over-year basis, but crude oil and natural gas production have seen a significant decline. Now, steel and cement production saw an uptick on the back of higher capex spending by the government. Fertilizer production too saw an uptick on the back of a seasonal demand for the upcoming Rabi season sowing. Now, high power demand amid significant heat wave also drove the output for electricity higher. Now, this shows that India's economic activities have remained fairly resilient despite global headwinds. Moving forward, we continue to be optimistic on the government's aggressive capital expenditure investments that are boosting the core sector's growth. The rise in manufacturing capacity utilization inching towards 75% levels also provides an indication of positive future activity. Now, the second half of fiscal year 23 is also likely to see an increase in activity due to the festive season and pent-up demand. Now, easing global commodity prices should also partially relieve the pressure on input prices. Now, coming to forward-looking indicators, that is S&P Global PMI. Now, PMI is an indicator that points in the direction of future activity in the manufacturing sector. Now, they're made up of various sub-indices, including those for output, fresh orders, export orders, employment, sentiment, etc. Now, in terms of the PMI, a reading above 50 indicates expansion and a print below 50 indicates contraction. October saw a decline in global factory output as demand was hampered by broad recession fears, high inflation, and China's zero-COVID policy. However, the manufacturing industry in India experienced significant growth in October, as evidenced by the Purchasing Manager Index, which increased to 55.3 in October from 55.1 in September. Now, it is significant that this was also coupled with a solid increase in employment. Now, the most recent figure is higher than the sector's long-term average, which is 53.7, and shows a significant improvement in the state of the industry. Now, the rate of growth in manufacturing jobs was also one of the highest since data gathering began in March 2005. The latest PMI results also indicates that economic growth in manufacturing industry remains robust and price pressures were contained. Now, the October PMI data pointed to an improvement in overall operating conditions for the 16th straight month. Notably, India's manufacturing activity was also the strongest in Asia. For Taiwan, Malaysia, Thailand, Vietnam, Philippines, the manufacturing PMI actually decreased in October. There was also a contraction in manufacturing activity in Taiwan, South Korea, China, and Malaysia. Now, according to data for the first half of the current fiscal year, India's economy performed well despite global challenges. In our DITM, we also covered government finances, GST collections, and credit growth, all of which were clear signs of economic growth. Now, we would like to draw the conclusion that despite the turmoil around the world, the Indian economy has been growing fairly healthily. Now, India's economic recovery, however, is under threat as fears of a global recession grows. India has historically suffered from a slowdown in the global economy, and the links between the countries are only growing stronger as trade and investment are increasingly intertwined. However, unlike previous crises, this time around, that there are some factors in favor of the Indian economy, and that has been providing optimism on its ability to weather this global storm. Now, we've spoken about free trade agreements at a stretch in one of our episodes. We spoke about India's renewed interest for FTAs and how India has signed trade agreements with Mauritius, UAE, and Australia in just the last 2 years. It is also currently in final negotiations with the UK, EU, and Canada. Now, the Gulf Cooperation Council is also keen to ink a free trade agreement with India, and both the countries are expected to start talks on a free trade pact next month. Now, India's newfound interest in trade deals is significant for several reasons. It changes India's reputation as a slow negotiator in trade agreements. It also indicates confidence of Indian economy and its industries such as manufacturing and services about taking on foreign competition. Now, the Gulf Cooperation Council is a regional, intergovernmental, political economic union comprising of 6 countries that are Bahrain, Kuwait, Oman, Qatar, Saudi Arabia, and the UAE. Now, experts believe that the GCC region holds huge trade potential, and a trade agreement would help in further boosting India's exports to that market. Now, the vast oil and gas reserves of the GCC are also crucial for India's energy requirements. India primarily buys crude oil and natural gas from the Gulf countries such as Saudi Arabia and Qatar and exports to these nations electronic machinery, iron, steel, chemicals, pearls, etc. The Gulf nations also contribute to the Indian economy through remittances. Now, remittance refers to a person's non-commercial transfer of funds to its nation of origin. Now, this increases the nation's gross domestic product and ensures capital flow. When we look at India's bilateral trade with all the 6 members of GCC countries, including the UAE and Saudi Arabia, it has increased significantly in fiscal year 22 on account of increasing economic engagement between the 2 regions. Now, these increasing figures assume significance as India is looking to negotiate a free trade agreement with the GCC. The India-GCC trade agreement, which is under negotiation, may also benefit from some renewed momentum following the India-UAE FTA. Now, GCC has emerged as a major trading partner for India, and there is a huge potential for increasing investments between the 2 regions. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.